All right, good morning, everybody. It is 6:32 on Wall Street, 3 hours before the open. China has cut an interest rate, and the Australian dollar is on the move. Well, anyways, it's time to get to Global Macro on. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities across the global markets using AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality. And we also put together risk on, risk off gauges based on the VIX, the 10-year T-note yield, gold, the US dollar, the stock market, something else. And we look at all that in real time, short term, medium term, and long term, so that we know what's going on. I like to know why money is moving around the world. I'm a professionally trained economist, but I'm also a professional investor slash trader. And so I'm constantly figuring out, before things happen, I'm trying to figure out, why would money move from here to there? Pretty simple. Why would the Australian dollar move because China cut an interest rate? Well, see, if I get that figured out, I can make intelligent investment decisions. Now, if you're new to QuantBox, because you're watching this on YouTube, first of all, it's delayed many hours, so you're already behind the curve. But also, riddle me this. What is it worth to you to have enough confidence in your trading, because you know why you're making these trades? Your confidence goes up so that you can let your winners run. Is that worth $8? Yeah, probably. So anyways, there's lots of pretty colors on QuantBox. Very pretty colors. Hummingbirds show up, but they don't understand how to use the data. Now, if you're smarter than the average hummingbird, I think you can figure this out. Now, yes, you're like, you might be new to statistical analysis. I gotcha. You're like, I love that scatter plot, but I don't get it. Yeah, don't worry about it. I'll teach you. In the $8 trial, there's a training course that goes over statistical analysis as well as macroeconomics. There's like, I think it adds up to about 18 hours of training. So you might not know it, but you're smart enough to learn it. And I will teach you for $8. Come on, man. So if you're watching this on YouTube, let's get going. Your destiny awaits. It's time for you to stop trading like a retail trader and start trading like an institutional investor. Anyways, with that being said, let me remind you. Ooh, that ghee didn't melt. Ugh. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on long term. Never risk money cannot afford to lose. Marx is not a healthy smoothie, Wayne. Yeah, it was green stuff. You say it's good for me. So anyways, there's the macroeconomics course. There's the QuantBox training course to teach you things like how to use a scatter plot. Yep. So anyways, let's get going. Let's log into the database. And yes, as you probably know and should know, ECB today. ECB today, yeah. Hang on, I'm trying to turn. Wait, does this? Let me know what you see, because I can't see what you see. Is my camera small or is my camera tall? I'm trying to get rid of my camera without turning my camera off. Large. Okay, now it's small. When I watch the videos, it's still too much emphasis on me. So what I've been doing or tried to do from time to time is just turn it off so the charts are bigger. But that's even better, right? Anyways, let's get going. Okay. All right. So, this is the thing I go to. This is what I go to even when I'm listening to the news. I'm like, what's the yield on the 10-year? What's the yield on the 10-year? And I know this was 4.24, then it was 4.25, then it was 4.26, and then it was 4. Now it's 4.25. So we are stuck there. What does this mean? It means nobody's buying bonds. Ray Dalio yesterday in Singapore, because I took my private jet. I flew to Singapore last night, hung out with Ray Dalio. I'm back though. It was cool. It was great. And Ray said, don't buy bonds. Well, what that's telling us is interest rates are likely to continue to go up. Now, I've been exposed to this risk, and I dumped that risk about 2 or 3 days ago. I'm like, I can always come back and buy the bond market later, but the bond market is currently falling and will continue falling as long as the market assumes higher interest rates in the future. So anyways, I want to buy it, but not yet. So if this number keeps going up and up and up and up, then the price of those treasuries are falling. Therefore, bear market. But we've been stuck at 4.25 for weeks now, I believe. Also, I think the other thing that's going on is the U.S. 2-year yield is at like 4.999999995, 4.999999995, 4.99999. Like literally, I think that's what's going on. And what that's telling you is, well, investors are not sure if the Fed's going to start cutting in a couple of years. Or you might say, instead of, sometimes like in economics, there's big I and there's little I, and these I's very often stand for something else. So if you don't want to think interest rates, you can think inflation. And what they're saying is inflation is not going to go away and whatever. So, but nonetheless, the higher this goes, the steeper the yield curve. Oil's back up, but back to where it was, 89. It seems like the fear factor is 90. Gold, okay, it's down but holding steady because this was, I think, 1919 yesterday or the day before. So 1930, not up, but less down. S&P 500 flat, but up. It's only flat because it's recovering from a down. So I would say flat, but back up. Remember, we're trying to get it above 4,500. Euro dollar stuck, Bitcoin back up. Cool. You can see over the last few days, little dips in the stock market right in here, little dips, but recovering. Looks like they're all trying to recover. Maybe I'm reading into it. Take a look at the gauges. Oh my God. Isn't that amazing? 3 weeks ago, it was risk off, right? Risk off. And what we had planned for is for them to go from risk off to mixed to risk on. That's what we've been planning. It's been weeks, and by the look on some people's faces, painful. It can happen. Painful waiting, though. Waiting shouldn't be painful, by the way. And nonetheless, it's been rolling back over to now mix. How cool is that? VIX is down, which is bullish. Dixie up, which is bearish. This is over the month. And right, so we went from nothing but bad news now to neutral. Very cool. So I'm happy with that. That's interesting. Today we have the ECB. And then later, I believe it's retail sales. Loading. I just want to make a point that these meetings are interesting because the ECB doesn't give any guidance. They don't tell us what they think the future holds, and I don't know if they know. So the issue is their GDP is going in the toilet, but inflation is high. So what do? Cut interest rates or raise interest rates? Okay. Again, this just shows no guidance. Interest rates up and then stay. Okay. They just don't tell us anything. So the future is is what, opaque? Inflation should be coming down, but it's still very high there. Excuse me. So nonetheless, this is the big thing. We don't know anything about the Eurozone. QuantBox is just pulling data from the ECB, and the ECB says we can't figure out tomorrow, yet alone a year and a half from now. So good luck. Yeah. So this hopefully gets updated with at least just new information. Now, I believe 66% chance the ECB raises one more time. At least one more time. Okay. Euro should be going up soon. Euro dollar. Pound dollar should be going up soon. Okay. Aussie dollar should be going up soon. So are you planning for that? All right. Looks like most things are flat. This is the, let's take a look. I'll change the color. I'll make it a little thicker. Okay, it looks like delete. Most things are in this range. Everything else is an outlier. And the slope of the trend is 0. Okay. Marx is Aussie bullish right now. China, about 90 minutes ago, cut interest rates. So you're on it, right? PBOC? Hang on. I don't know. Very often it's hard to find that. Let's see. PBOC. Let me just pull that up. It usually doesn't say like, we just cut interest rates. It's, I just, maybe, PBA research and report on it. Anyways, no, you'll have to Google it. Google it. Yeah. That's enough to affect it? Yeah. Yeah. Anyway, so it looks like everything is in a pause, not only for the ECB meeting, but retail sales is a big deal too in the United States of America. And well, like I guess we should talk a little bit about CPI yesterday. So I made the bold move in the QuantBox video yesterday in QuantBox Live. Um, that headline would be higher and core would be lower, and I explained why, and that's exactly what happened. So yay us. Okay, great. But I keep reading today that was red hot. Inflation's red hot in the Fed, blah, 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 blah. I think of many reports I read yesterday, people don't get it. They don't understand. They're misreporting the information. From my point of view, in my humble point of view, they're wrong. So why was CPI high yesterday, and why did we predict it was going to be high? The headline. Well, gasoline prices are high. Duh, right? And so, but if you remove that, because we want to know what the Fed policy is going to be, well, the Fed can't do anything about gasoline prices, so we cut that out, and of course, prices are falling. So how does that even work? Like, what does that mean? It means if you spend all your money filling your gas tank, you're not taking the family out to Applebee's tonight because you spent your money on gasoline. It's disinflationary. You're burning your disposable income, literally burning your disposable income. You have less money. If gasoline is cheap, you're like, oh, we're going to Sizzler tonight. Yay, right? No. Just to go to your lousy, stinking, no good job with your idiot boss, you have to pay high car insurance. Remember, car insurance is up 20%. And you got to pay more at the pump to fill your tank. Well, boo-hoo. You can't afford to go to Applebee's and Sizzler. So it's disinflationary. Yes, retail sales are high. Headline inflation is high, but it's disinflationary. So, to me, a couple of the reports I read yesterday, they don't read into it that way. They just see a headline number, and that's good, bad. That's all they know. That's good or that's bad. But they don't understand the context of the numbers and the behavioral finance aspect of it. And so that's why you get like high headline number, but falling core. So it's boy, you got to be careful of where you get your information, is all I know. You got to be very careful. And don't listen to an idiot on YouTube. Unless he's a former supermodel. So I guess one thing we could probably look at here. Oh, Looker cannot connect with your data set. Really? No. Really? Let's reload it. Ah, kicked me out. No wonder, huh? All right, let's try it again. Maybe we'll get lucky. It's a complex beast. You'd be surprised how much data goes into QuantBox. The amount of data is insane. All right, let's try this again. GDP. Load. No! All right, let's see. I should be able to get my data anyways. All I want to do is zoom. Now I think I got a browser issue. Now it won't let me expand. Interesting. I have a browser issue, I think. All right, well, let's try this. All I'm trying to do is look at, well, I guess we can do it comparatively. Let's zoom in. Well, not that much, Wayne. Come on. Let's go back. All right, GDP. Global GDP is falling. Oh, I got multiple euro areas. Interesting. Maybe one's EU and the other one is euro. All right. How are we doing here? Which one is which? Okay, that one's the dead one. Let's compare. No, we'll leave it there. How are they doing? How's Europe doing? I guess we need to see if this GDP is going to come down. More. It's hard to compare, like going negative 5%. Look at the UK, like negative 11 GDP. How is that even possible? And then these huge rallies, it just shows you how odd COVID was. It's so odd. I mean, it's startling to think euro area that a GDP that looks like that. But that's even only to 2001. Maybe that's the issue. What's going on here? I just noticed that. Are we not getting the update? That one to 2030. Interesting. Now that's what's going on. I'm missing some euro area data. That's what's going on. Cool. I'm going to take a shot here. That dies. All right. Hang on. Hang on. I got to yell at somebody today. All right. I got to take a snip. We're missing a data set and a couple of, must be this glitch with the 2 euros. All right. Got it. I got it. I'll work on it. Actually, I don't know if I got. No, let me do a new one. New. Oh, they're not going to know which one that is. Hang on. All right. Snip. All right. There we go. I'm going to say this, this, and this. Cool. Cool. Got it. I'll send that to the team on your behalf. We won't stand for this. All right. Cool. So now, what? What do we do? Today, we're just going to have to wait it out, I suppose, and carry out this what we intend to do. I know what I intend to do, but the ECB is going to make their policy actually pretty soon, isn't it? Yeah, it's pretty soon. So I will do the over at forex.today. I will do the live stream of the press conference and see what we can learn. Because remember, that's important. We need to learn what the ECB might do in the future because they're not giving us guidance. So there's an extra level of work. While that's happening, I think it's while it's happening, then retail sales comes up. And because gasoline prices are high, retail sales are likely to be up, right? But that may not mean what the media says, that the consumer, for example, is doing great. The consumer is out spending. No, the consumer actually has a job. Remember, we have very, 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 very low unemployment. So lots of people tend to go to work every day. And they have to put more money into the gas tank. Because really, ultimately, your Ford F-150 runs on money, doesn't it? So your vehicle is sucking more money out of your wallet. And therefore, retail sales are up, right? So you're happy with that? Everything's good? No, no, because it removes disposable income. So savings goes down and spending goes down. You pretty soon all your money is going to go to rent, medicine, apparently car insurance, gasoline, food, and there's nothing left over. So you're going to cancel your annual subscription to Disneyland this year. Happens. Dude, people spend a lot of money on that. We used to have friends that spent, and I'm not even joking, $50,000 a year on a Disney subscription. I'm like, wait, what? Yeah. Yeah. Apparently that's not unusual. I'm like, really? Oh my God. Hope you're saving for retirement. Yeah. But anyways, so yeah, so what happens is you don't have unlimited amounts of money. So this is where economics comes in. Economics is the study of scarcity. So money is a scarce resource. So if you have to go to work and you have to drive your Ford F-150, it's going to remove disposable income. Something's got to give. You're not going to feed your kids this month because you're going to favor your Disneyland subscription. Maybe you don't watch football. Whoa, I shouldn't go there. Okay. Whoa, I almost said something I could have regretted. But anyway, so you cut back expenses somewhere else, right? Or you put it on your credit card. But the problem is credit card defaults are going up, savings are going down, credit standards are tightening, interest rates and on your credit cards are going up. So yeah. So maybe retail sales are up, but it doesn't mean the consumer is happy, the consumer is confident, the consumer is going to spend everywhere. No, they're going to spend where they have to and cut back. Okay. So be careful of misrepresentation in the media. Anyway, so we'll leave it at that. Today will be another volatility day. And unfortunately, both things are happening basically at the same time. Okay. For instance, you can go better on a world cruise for $50,000 a year, including food and drinks and healthcare. Yeah, but you don't get to wear flair all day. Dude, I've made some mistakes in my life, but like meeting up with friends at Disney, you're like, oh, you're going to be in Orlando too? Oh, we should meet up. And don't ever do that. Because once you see your friend in lederhosen with flair up and down the suspenders, I'm like, dude, you wear flair at Disney? Friendships can break, I'm telling you. So you got to be careful. Yeah. So, anyways, yeah. So, anyways, oh, is that right, B Red? Pretty funny. All right. So we got to go. This is a busy morning. I'm just going to really, my focus today is execute what I already want to do. That's risk on. And the second thing is pay attention to what the ECB says, because that's the only guidance I got. Retail sales is going to come out high because we're spending money on gasoline. People are going to think one thing, and then I think reality is going to kick in later. So maybe that ends up uh, playing out tomorrow. Yeah. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers. Yay.